Okay, so let's make an update on the situation that we currently have on GBP, GPY. Let's start from the monthly time frame. Now, on the monthly, clearly, we have a market that has approached an extremely strong level of structured support. In fact, from here, the market has started all this huge move to the upside. Again, the market tested this level here and started this move to the upside. And then again, lately, the market has tested and rejected this low here. So clearly from the monthly time frame, this is an extremely strong level of structure support. Also, what we can see is that in the previous months, the market had created this monthly candle. Now, when you see a monthly candle like this, you expect the next candles to fill in the wick, which is exactly what the next candles did. And I spoke about this pattern many times on all the platforms. Going down on the weekly time frame, what do we have? Now, on the weekly, we can clearly see that the market has created this W formation. And after a W formation, what do you expect? You expect the market to give you a move to the downside to complete the pattern at the neckline, aka the previous resistance, which is now turned support. So on the monthly, we have a market that clearly we expected to make this move to the upside. And on the weekly, we have a bearish pattern from which we expect a retracement. Now, this zone here is actually exactly the supply area from which the market has started this move to the downside. That, if you remember, is exactly the move to the downside that we wanted to see. Why did we want to see this move to the downside? Because the market had created this W formation from which we definitely expected the market to give us a move to the downside. Going down on the weekly, what do we have? Sorry, on the daily, what do we have? Now, on the daily, clearly we have still a bullish market. Why do we still have a bullish market? Because the market is still above this support. In fact, the market has created this move to the upside. And by the way, was this move to the upside expected? Absolutely yes, because the market had tested here this previous resistance, not on support, creating this impulse and correction pattern, and we expected a continuation to the upside, since on the monthly we also had the candle that we expected the next one to fill in the wick, and in fact we capitalized with students on this move to the upside for a very nice 1 to 3 risk to reward. And currently, what do we have? As I was saying, we have bullish structure at this area, so support, which is again support here. So until the market will remain with this structure, the market can and should move to the upside, so it can easily break to the upside. So the only way in which we can be looking for the continuation to the downside is if the market will actually manage to break below the structure. So before I show you how we will be approaching GBP, GPY with students, let's first go and give a quick check at what we have from a GBP and a GPY perspective if we check the COT data. So the commitment of traders, which is what the biggest banks and institutions are currently doing on the pound and on the GPY. Now on the pound, we can clearly see that net positions went from minus 25K to minus 14K, so clearly increased with the last report, with 6.6K longs getting added and 4K shorts getting closed. And if we go and see what we have from a GPY perspective, we can see the net positions for the GPY increased as well, and we currently have 52K longs and 20K shorts. So overall, GPY getting stronger with net positions increasing and GBP getting stronger as well. So how can we be looking for a potential opportunity? Now, as I said, the structure is still bullish. So if the market will make the move to the upside is absolutely understandable. And we cannot be looking for any shorts. However, we won't be interested in the move to the upside, at least on GBP, GPY, because it is against the patterns that we have on the weekly, as we have just seen. So we are perfectly fine with missing out on the move on GBP, GPY to the upside. But if the market on the daily will actually break below the structure, then what it means? It means that the GPY is getting weaker. It means that the GBP is getting weaker than the GPY. And if the market will break this structure to the downside, then all this previous support that we have here will be turned resistance at this zone. And after the break on the retest of the level, what we will be doing inside of this zone with students, inside of this area with students, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and creation of this impulse, correction and impulse pattern to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.